First, there's a new month, and I've got to tell you that this is historically it's a good month, and we finished well with October, except for with tech, and that was probably because the fiscal year ends for 50% of the mutual funds. Don't want to show that they own tech, but we've got some big news for ourselves. And the first one I just want to start with is there's uninformed social media talk about China being reopened. I have nothing on it other than to say that a chief propagandist is trying to shift the narrative, perhaps so that President Xi, who does, I understand, have an mRNA vaccine that was engineered from Pfizer, and he has to figure out how to get it to them. But if he did, we have some stocks that would really benefit.
It obviously would be great news for Wynn Resorts, which had a big move yesterday on a 6% stake. It'd be great news for Estee Lauder as well. China's a big growth market for them, and Starbucks too, because they have really aggressive expansion ambitions in the region. So those are what I would say would be the three stocks to watch on this. But again, unconfirmed reports, so can't really do anything.
Let's not forget Disney too. Now, Disney Plus also gave you a new aspect of being able to get toys in advance. I regard this, as much as I love Disney, as not significant, but the marketplace seems to lap it up a bit.
At least it kind of shows that they're willing to take a subscription product, Disney Plus, and build this 360 view of their total business, right? But inconsequential. I agree.
But I think I think people take it as a precursor to other things that you might get. I mean, one of the things that when Disney Plus was first talked about, there was a notion that they would tie up with Salesforce and would be able to say, okay, look, we know that you like Eli Manning. Well, if you want to like that, we might give you a discount on something else we're working on, which is ESPN holistically with the parks. I believe they will do that. I think that they're taking a little bit longer.
Yeah.
I do want to point out, though, before anyone leaps to an occasion of buying anything, that we are still +6 in the oscillator. That's not where I want to be. However, there are stocks that are under severe pressure today that we must talk about, and one of them is Eli Lilly.
Yep, of course, Eli Lilly, which has been such a great stock this year, coming into today up 30%. Really one of the strongest performers in healthcare, which has been a really strong sector this year. But it was a noisy quarter. They did beat on the top and bottom lines, partly driven by COVID antibodies, but they did lower their full year outlook to reflect FX headwinds, which is affecting a lot of companies right now. But I think what I'm most focused on is the incredible start that Mounjaro is off to. That's the type 2 diabetes drug, which is expected to get approved for obesity next year.
25 pounds. You can lose up to 25 pounds.
But it was a huge revenue beat for them. So that just shows that it's off to a fantastic launch. 70% of new therapy starts are naive to type 2 injectables. So they're expanding the class. That's really what they want to see. And they think that price increases are going to come in coming quarters. So stocks down again. They did lower the guidance, noisy quarter, but I don't think there's a thesis change.
And I will speak to David Ricks later today, the CEO, about the pipeline. I know that they will not say much about their Alzheimer's. Now, remember, Biogen does have an Alzheimer's that has been successful. It's not clear whether Lilly's is better. I do know that Lilly has tremendous brain science. I know that because of my chief spokesperson. I'm chief spokesperson for the American Migraine Foundation, and we're always very grateful that Lilly has done so much brain work. Now, I want to point out, because this is, remember, our club is about teaching. When you have a stock that is down $15, so you have to understand this. A broker gets an order. It's got 1 million shares to go. All right. So sells 500,000 down 15, probably another 300,000, maybe down 17. And then right at the end of the day, takes 200,000 and nails it down 20. And then he comes back to you, or she comes back to you and says, okay, look, I sold your 1 million. And I got an average of, say, down 17. And look at the stock, it finishes down 20. What am I trying to say? The lowest price today will most likely be the close. So if you do want to buy Lilly, maybe in the last hour, you buy some in anticipation of my interview won't have anything that's not what's known. But we like Lilly very much. And what I'm saying is that this is not your moment. That you can get this stock lower because of the way that institutions trade. But I do urge you to be in Lilly because I believe that their weight loss drug will be, and I don't think this is hyperbole, the greatest greatest drug of all
Yep.
time.
And they're saying approval as early as late next year. Right. Maybe people were looking for sooner, but that's why it's also down today. But I mean, keep in mind, the stock was at an all-time high, I think, yesterday.
Yes.
So,
and remember, the comorbidity to obesity for COVID was incredible. But consider that to be like Botox. I mean, people found off-label uses of Botox. Now, this would actually be an on-label use for weight loss. So if someone, say, had a drug that gave them weight gain, like some of the antipsychotics, they might make it a pair. I mean, for instance, it's well known that the Zyprexas of the world have weight gain, but so people don't take them. But if you had this in conjunction, and that's how I think it's going to be used. There's a vanity aspect that always gets done, but there are many drugs that add weight, and this would be something that would reduce that weight. That's important. Now let's go on to a very interesting transaction that I managed to be able to get a little bit extra insight. This is J&J buying Abiomed. That's how you pronounce it. It's Abiomed. That's Abiomed. They've been on the show a couple of times. This is a company that makes very important. They have a great pipeline, but when you want to think about it, it's cardiovascular, particularly operations. When you do a very difficult heart operation, heart failure, the heart has to stop in order to be able to do the surgery. They have let's say a duplicate heart that they can insert, which makes it so that even though your heart is stopped, they can do what they want. Now, I do a lot of stuff. I'm also being honored by the baby. I'm by a pediatric division of Columbia Presbyterian called the Baby's Heart Fund, and there again, it's about having the right particular device to make it so that when you do a transplant, which by the way, this is another thing, when you use transplant, you have to stop the heart. Anytime you have to stop the heart, it is the largest cause of death in surgery. So you can imagine J&J picking up something that actually has a very good rate in stopping fatalities. That allows their med tech division, which some people were upset that it was only up 8%. I was, but somewhere, to grow faster. Maybe as much as 10%, which would then make it so that the combined company of med tech and pharma might be the fastest growing major pharma in the world.
Yeah, that's the key. The deal is expected to close prior to the end of the first quarter, so they're going to have some time in ahead of that separation. And the key is to accelerate the revenue growth, not only of the total enterprise, but of that pharma med tech business through this deal ahead of when it becomes its own.
All right, guys, welcome back. Thank you so much. That was a lot. Let me just start with China opening, but as Jim said, that news was as Jim said, that news about China opening. Here we go. Yeah, as Jim said, the news about China coming was something on social media, so we don't want to put too much into the China opening. But I want to talk a little bit about, do you think that could be because we're getting into the holidays and China opening the holidays coinciding with the election? I think it would be a great time for stocks. I really do. So I think that if you're looking to buy, as he says, I totally agree with him where you should wait, but you should be very careful about chasing certain stocks. So I said before, everything is looking good. We go into the holidays. China is opening. As I said yesterday, we need one of these things to happen for us so that stocks could rise better. I think that we almost passed the worst, which is we had a rough October. The couple months before was horrendous, but I think we're coming into a nice little thing. We're going to go steady. It's not going to just shoot up, but I think we could make money. And I think we should look for things to buy, but we should not look for things to buy right now. So I will agree with him on that portion of it. Okay, so let's just talk about some stocks that he did talk about. So I'm going to just pull up one of the stocks that he talked heavily about, which is not SD Lauder, sorry, but Eli Lilly. So I want to talk a little bit about Eli Lilly. So let me just pull up Eli Lilly, guys, so we could kind of have that discussion as we go forward. So we have Eli Lilly, and they're saying that it's down. Yesterday, it was at an all-time high. But I'm telling you right now, it is a great stock. But remember, Jim had told us a year ago to sell Eli Lilly, and Now Eli Lilly, I know he believe in it right now, but just to go forward, just be careful because I don't want you to chase that stock. I don't think this is the right price. I don't know if today is the right, as you said, the oscillator is not at the price where they would want it to buy. It's, I don't remember what he says, but it's not at where you wanted to buy. So be very careful about chasing stocks, people. Be very, very careful. You don't want to chase stocks and get hurt. I mean, Eli Lilly is not giving that of a big percent in dividend. It's just about 1% dividend. So it's not a huge percent. It's not a 3-4. If it was like a 3-4%, I would have said, well, maybe you could take a chance. But I don't think the dividend is very big where you could take that chance. So just be very, very careful about that stock. But there's another stock that I like, and I'm comparing Eli Lilly to Johnson & Johnson. I think Johnson & Johnson, it was a better situation for you to get in. Johnson & Johnson, they're totally great. They have a better dividend that can soften the blow. So Johnson & Johnson, guys, could be the stock to buy. I believe in it. But as again, here is not it. I would like to see you get into Johnson & Johnson around the 160 mark. I think that would be great if you could get in around the 160, 165. That will be great. And then we talk a little bit about China. I just want to revisit China, and one of the greatest stock that will benefit from China, it's Estee Lauder. So just be careful there, guys, and just be careful about that. So what I'm gonna do in a minute, I'm gonna go back to the investment club because they did mention a couple stocks that I want to get in. So they did mention Devon and they did mention AMD. So I will just go back, play a little bit of what they said about these stocks, and then come and do some more recap.
Dilutive to neutral to adjusted EPS in the first year, but then accretive by 5 cents in 2024, increasingly accretive thereafter. So it's a big acquisition for them. They have plenty of cash, so they can afford it.
Now, one of the reasons why it's dilutive and why the stock's down is a lot of times, again, we're trying to give you some insight that others don't have. They have a huge pile of cash. Now, they invested their cash in treasuries. They're getting, say, 3-4% on their treasuries. So now they have to spend that cash. They cash their treasuries in. You're going to lose the money that they were earning on treasuries in order to do this. And that's why it's not accretive. So I say let people sell. Let them sell. Again, sell Lilly, sell J&J. We're about getting the best price, not about just saying, hey, go buy. So let them sell this one. I think it goes lower. Another one that I think is very, very complicated is AMD. And the reason why AMD is complicated is because people are trying to develop a new narrative that's away from PCs. Now, I don't know how much Xilinx can make them do that. We know that PCs are horrendous.
Yes.
And that's very bad for AMD.
Sure. They report tonight. They report tonight. Obviously, expectations are very low after pre-announcing a big shortfall due to PC demand. I think the interest on the call is going to be about data center revenues. Is it holding in the United States? What can they ship to China? I think that's a big question mark.
Very hard.
Yeah.
Very hard. We speak to Lisa Su. Now, Devon is tonight. There's talk about a windfall profit tax. Devon's going to be very profitable. We don't know where the windfall profit, where would it apply? The refiners? Would it be the people market? No matter what. I mean, Devon does not control the price of oil. And nor does Exxon for that matter. So Devon should be one that if you're worried about the actual windfall profit tax, it shouldn't apply. So be aware of that. By the way, the cheapest one on this wall is Pioneer. That's the one I think can still have the most upside. And then Humana and Estee Lauder. Estee Lauder is very much linked to what's happening with China.
Right.
And Humana has just been a horse. I suspect they'll be profit taking, as there often is during this period when you have a stock that's up a great deal. Estee Lauder's up in anticipation entirely of China.
Right.
We do have a quarter coming up. I think that's more important than
Yeah, I think the key will be, investors be willing to look past the noise that happened from the lockdowns in China? I mean, we started the position because it was just down so much from when we sold.
Right.
It derated significantly.
Right.
The multiple was all the way back to pre-COVID levels. So that's where it was interesting to us. And so it's about, will people be willing to look through the transitory factors of the China lockdown?
Remember, you got Fabrizio Freire. He's the CEO. He's probably the best in the industry other than Bernardo. No. LVMH
Yeah.
in terms of the high end. Now, I have a 1 o'clock show that I'm going to be on with Tyler Matheson,
Yep.
and we will be speaking about club stocks, of course. And I also want to point out that, again, with some people last night, just telling me, educate club members. I listen to you. We do what you say. We are about you. We are not about ourselves. This is Jim Cramer with Jeff Marks, exclusively for the CNBC Investing Club. Thank you.
All right, guys. Let me just stop this here and give you my take. We could just. So yes, guys. As I was saying, let me just stop this script here. Yeah, welcome back. Thank you so much. Thank you so much. So I did want to hear the end of that, and I'm glad that I do. So let me just talk about AMD that he says is going to report tonight. So let me talk about AMD briefly. AMD is a tech stock. Tech is really, really high right now. I don't believe you should touch AMD right now. I don't believe you should touch tech right now, so be very careful. I expect AMD to fall significantly tonight. We had some tech reporting. We even had a lot of great companies like Meta suffering. So be very, very careful about AMD and kind of wait. I've seen on some of the social media site that I joined that asking your people is hooray, and buy. And I was like, no, you're buying too quick. So kind of wait. And I mean, if you believe in AMD, as I said before, when you could get it as a better price, continue getting it at a better price and hold it for 1 or 2 years, and you know that it will definitely come back. But let me just talk about some of the oil stock. As he says, Devon is reporting. So let me just pull up Devon for a while, and we will talk about it. Devon is not one of my favorite. My favorite is Pioneer. So here we have Devon, guys, and it's at $77. They give a great dividend. If you want that dividend, as I always talk about dividends, guys, you want to get into energy stocks. Energy stocks is hard to tell because of what is happening remember, the war is still going on in Ukraine, and this Devon, they're giving a 8% dividend. So think about it. Even if you spend, like, you buy it at a high and you're down, the dividend that you're getting for Devon, it's softened the blow. So I wouldn't say now is the time to buy. I have Pioneer, and I'm going to try to buy some more Pioneer. I know sometimes if you don't have a lot of money and you're buying Pioneer 257, it could be hard, but just buy a couple of shares if you can of Pioneer, and you get like a 15% dividend, guys. So anyway, guys, thanks for watching the video. Let me know what you think about the reaction. I says, don't forget to comment and subscribe, and I'll see you tomorrow for another video. Thank you, guys.